Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. We'll see if Mike or Michael join us in a little bit. Glad you were able to make it today on this Friday, the mid-Friday in the month of September. As we all know, September tends to be a weak month before going into the October, November, December time frame, the final quarter, where we expect if the market does what it has done in the past historically, we expect a little bit of a bounce going into the end of the year. We shall see. We got a lot of stuff going on that could impact whether the market does that or not. I want to remind everybody that all materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. If Michael was with us, this is his disclaimer. So let's get started. I want to remind everybody that excuse me, the Active Trend Trading members, to premium members and basic members, I like and I want to make sure that folks are walking away with learning how to trade the market. And from the emails that I get back, both from prior members and current members, that is in fact happening. I'm very thankful for that. This coming Wednesday evening, September 21st, we're going to be talking about how to find rock-solid support and resistance. This is going to be a two-part training session. Then we're going to follow that up with, once you've found the rock-solid support and resistance, that's horizontal support and resistance, how do you strategically plan your trades around that, whether you're trading either options and or regular stocks, stocks or index ETFs. So that is going to be a good session. So let's get into kicking off what we're seeing today. Last week we were basically just saying that the market was kind of dull and listless until Friday, and then it dropped out of the sky. It appears, based on today's price action and just the price action of the past week, that the market's kind of going in fits and starts, or fits and stops, one of the two. As you know, over the last few days, we've had big up days, big down days, but we're continuing to operate within a range. It appears as if the S&P is waiting on the Fed. The NASDAQ has been the strongest of the three tracking indexes that we track. But it also appears to have moved into a holding pattern, just to wait and see what what's going to transpire with the Fed meeting next week. What's on the line with the Fed, and also with the Russell rate also waiting for the Fed. So what is involved in waiting for the Fed? What is at stake? Well, one thing, we saw a little bit of saber rattling by the Fed last Friday, perhaps a little bit of shakeup over in foreign soil with the North Koreans testing a nuclear weapon or missile, and so that may have shaken the market up. But it appears as if things are just waiting for what's going to happen. Will the Fed raise rates like some of their presidents want to do, and what will be the market's reaction? One of the things that both Mike and I have been talking about is that what happens if the Fed is, in reality, all they're doing is basically getting set up. They rattle their sabers a little bit, become a little bit hawkish on the rate increase, only to be able to say, oh, sorry about that, the market's not in good enough shape for us to raise rates, and therefore we're going to let them sit. Well, that might lead or provide the catalyst for the market to spring off of that, go back up, challenge the highs that were established over the last few weeks, and see if it can push on through it. if you look out there, and this is why I don't like to read a lot of news, but there, if I catch, something catches my attention, like one of the big money managers like Carl Icahn, Jimmy Rogers, some of the others, if something they say catches my eyes as it comes across, I get a feed on my phone that just basically highlights some things. And if I catch them, and what caught my eye this week is both Jimmy Rogers is a longtime investor, has done exceptionally well, lives in the Far East now. He and Carl Icahn are basically saying, hey, there's clouds on the horizon. Not good economic clouds, but at the same time, with that said, we also have to keep in mind that the market has been in an upswing, and for a while we're going to continue to play the dips until playing the dips stop working. So conflict and question, and then others are saying, hey, the market's going to all-time highs again, it's going to push up there. And so that's where I'm talking about there's conflicting observations out there. And of course, we don't know which happens until it actually does happen. And then the big question mark is, what will the impact of the election be on the market? And whether you are a Trump supporter or a Clinton supporter, each come with a separate set of economic packages. One of the things that concerns me significantly about Clinton is she comes with a $1.5 trillion tax increase on the U.S. Add to that, she has plans to charge us traders a transaction fee / transaction tax every time we trade, with the intent of dampening and holding down on trading. From my perspective, that is a negative on people who do in fact trade. And then and it'll be a two-way tax, one when you go in to a position and one when you come out of a position, on top of your regular brokerage fee that you're paying right now. And with the millions and millions and millions and millions of transactions that take place on a daily basis, even if it's only 50 cents to $1 additional on your trade, that's gonna be a huge number by the end of the year. So that's one of the things to be looking out for and watching for. Secondly, okay, let's get in and look at the stocks above their 20-day moving average as an indicator. One, here's where we were last week. We were dropping, had a big gap down on Friday. And then earlier this week, we actually had a trigger of the early warning alerts. For those of you early warning alert folks, both a standby trigger and then a buy trigger. That took place, and so we have jumped into a position on UPRO on that. Any of the three index leverage index ETFs would be appropriate numbers to get into. Excuse me, just got to check here. Got an alert going off, and I just want to see who's moving where. So if we take a look at I'm utilizing the spiders, which is up here in the right-hand corner. It is the bar chart portion of this, and as we say, there is a level of support that's down here, just below 2130. I think it's about 213. It's about 212.50 or something like that. And then, of course, we have the resistance up here. But also we have resistance at the top of this gap where it gapped down. So it would not be surprised to see it. Prices on the S&P machinate between the lows and the highs, waiting for the Fed. As I said, we got an individual signal as the Percentage of stock below their 20-day above their 20-day moving average drop below the 30 level, which tends to be an indication that a turnaround is in the process of either happening or going to happen in the very near future. So as it's pushing back up, and as you can see, we got one big thrust up day, and then it's backed off. This is somewhat different from what we've seen over the past couple of times that this has been down, and it's been so challenging to pick up a trade on the index ETFs or the leverage index ETFs because these reversals have been hard reversals and just immediately come off of a low and rebounded, very quickly with very little opportunity to get into the trade. And it seems like we got an initial really nice reversal, and now we are pausing, and I think this pause is to wait and see what takes place next week with the Fed. If we hammer back down into this area here, that's fine, because what we're utilizing is just these lows. If these lows are violated, we're going to be out of any long trade we had. And Rick Berry says that had heard September rate change unlikely due to less than expected August consumer spending. Yeah, Rick, we've seen that with that kind of decision making by the Fed over the last couple of years, where it's like a snapshot of, well, this week the snapshot says this, and then they change their mind and all that kind of stuff. And so, who knows, that might lead us to a nice little rally into the close today. But it is so noise driven and news driven that it's really challenging to make up our mind on which way things are in fact going. Here's a percentage of stocks above their 200-day moving average. As we see, we've pulled down. We'll see how it finishes the day off and the month off. This is the month of September. This is a monthly chart, but it too appears as if it was topping out. And again, it all comes back to what's going to happen next week with the Fed. The Fed doesn't raise rates, that may give the market a green light to continue on climbing, at least back up to its past resistance area. Now, looking at, and we're going to look at the charts of like the NASDAQ and all that kind of stuff, slightly different take on each one of the markets. So we're here right now. From where we were last week, we had both the NASDAQ composite were in fact down from their past highs that they achieved last year. And what we see here is that we bounced back up above that for this week, and so both positive for the year, all of the indexes. Regarding the all-time, the highs they made last year in 2015, the Dow is still below it, and the Russell is still below it also. Let's take a look at some charts here. Here we go. Okay. This is the S&P. I have drawn in the Fibonacci retracement from the low that happened on 6/27 up to the high that happened just on August 18th. It was a nice strong move up, and then we kind of went sideways, fell out of bed a little bit, but it did do a real quick rebound back up to the 8-day moving average, fell back down to support, put in a spinning top at support, and then rebounded off of that. Where did it hit? Where did it wind up going? It went right to the 8-day moving average and then reversed off of that today. But it's reversing a little bit less than it did yesterday. This 2134 level is the level from last year's high and also marks the all-time high. And as we can see, these are live charts, and price action is starting creep back above the 2134 as it's been down here in this testing area based on both the fib retracement at the 38.2 and that all-time high from last year, the 2134. So appears as if it's moving back up. If we do get a really strong move into the close where price action either closes at or close to the 8-day or at the 8-day, we can probably look for it to push on through this 23.6 retracement and then retest around the 50 and or the 20-day moving average. The strongest resistance is at this 21.59 level all the way up to the 21.94 level. So that's what we want to be looking at, because you can see how many times it hit off of that floor over here, hit again off the floor over here, and then that has been acting as a level of resistance moving forward. So on a weekly chart, basically we get the big sell-off down to the 20-week moving average last week, and now we're getting basically a little bit of a rebound back up through it, and we'll see how well that holds. Again, the price action. I'll throw up a chart of UPRO just real quick. Excuse me. As you can see, similar type chart, a little bit different, but UPRO has got this support down here at about 68.81, and so I think we have a stop loss on our position down at like about 68.50, 68.40, somewhere in that area, giving it about 30 to 50 cents from this low, because if it does drop this, it's going in the wrong direction. It's probably going to retest then back down in the 67 to 66 area before trying to rebound. Go back to the S&P just real quick. I want to point out a couple of other items. One is, there we go. One is as price actions, attempt to force their way back up, this rebound is totally different than the rebound we experienced back in June. And then if you go back to the rebound at the beginning of the year, we had a real quick rebound up, but then we hit, that failed, dropped back down, did the retest, and then the retest here in February led to just a huge acceleration up to the upside. In this particular case, that did not happen. So anytime when things, when it's different the way they happen, that's why we want to be paying attention, because it could mean that the personality of the market is changing somewhat. Well, let's take a look at the NASDAQ index. Okay, NASDAQ, as we see, got the better of the other two indexes that we track off of, and it bounced all the way, made it all the way up in just about to the resistance zone from these past highs. Again, if the Fed does something pleasing to the market next week, we would anticipate a breakout of the NASDAQ and moving on up. It has rebounded enough to actually reverse the trajectory of the 8 and 20-day moving average, which is positive. And we can utilize this level at about 47.32. I'll draw that picture in there. Maybe. There we go. And go over here and there we go. That's down right about this point here. And so that's, if it pulls back to the midsection of this week's big candle, that would be about there. But as you can see, it's got also some pretty good support right here at the 47.50 level. So I'll be watching this. If it does push all the way back here to the top prior to the Fed meeting, Fed reporting out next on the 21st, I'll basically have to pass on the short side trade because it will be, just, too close to some significant event. If we had a week or 2 weeks before and it hit that high side up here at this significant level of resistance at 48.38-ish, that would be a good place to basically just plan a short side trade because it has not pushed its way up through that at least twice now. The Russell. There we go. As I'm going to say, the Russell came down, did its initial rebound off the 50, broke down through the 50, closed below the 50 on Wednesday, rebounded back above it on Thursday, and today is maintaining this pop, but it's holding right there just above the 23.6 retracement, and it is not pushing back up through the 8 or the 20-day moving average. And therefore it is a little bit weaker. Like the other indexes, I'll just, we're getting some, a positive turn on the TSI. Let me get another color here. Not, we can basically draw a line in here, and we can actually wait until price action on our action on the momentum pops its head back above that, and when it does, that would be typically corresponds to a real good buy point. On the weekly charts, we did get the TSI rolling over, and again, you can draw a straight line across here, or even from here to that high point there. And if price action moves, or if action moves back above that level, that'll tend to correspond with a potential buy point on the Russell. And of course, you'd be trading either the IWM or TNA in that particular case. So just taking a look at this from a lot of specifics on it, is that basically this, it had come down and dropped, not quite to the 382 retracement, but it did nice rebound back above that. If price action can push back up above the 8, that may be an indication that we're going to move higher. The Russell, keep in mind, is the small cap index. If the Fed does raise rates next week, the small cap index tends to get hammered harder by that, simply because it is much more, the stocks in that index are much more sensitive to interest rate increases, because they typically have more borrowed money out there at stake. So any questions or comments about the indexes, folks? Okay, well, let's move back to the yeah, Rick asked a question, might the election keep the Feds from changing rates? That's an excellent question. The answer to that question is, well, nobody's going to know the complete rest of the story, is that there is a sense about that the Janet Yellen was taken aside by the president to say, hey, whatever you do, don't do anything that's going to shake up this stock market prior to the election, because we don't want any major big sell-offs and that kind of stuff in the market itself. And it is a known fact that typically if the market is up, the incumbent party tends to win the White House. And so we'll see what happens from there. Again, that's the conjecture. We don't know what actually took place in that private meeting between Janet Yellen and the president. So your guess is as good as mine. It seems like the markets movement actually has a bigger impact, a more significant impact on the election than the election has on the market, at least initially. And there are starting to become out, as people are thinking through what could take place, there is some better thinking that's going on regarding, if Trump wins, you may get a big sell-off initially, but that some of the policies, more pro-business policies that will be adopted, will eventually be better for the overall economy, and thus drive the market back up. The market, and then on the flip side of that is initial, spurt with Clinton win. But then when some of the policies do start taking effect down the road, that could have a dampening effect on the market. So again, your guess is as good as mine. So what's the path of the least resistance? And you may wonder why I have a Texas and a Texas Longhorn, the Bull, and the Cal Bears on here, is because on Saturday night I'm going to go see Texas play Cal. I happen to be alumnus from both universities, and so it's one of those things. I can go to a football game, and I have my favorite, but that regardless of who in fact wins this ball game, I win, so it's okay. So initial. Very, very, very short time until after the Fed meets. I think we're going to basically just meander around a little bit. If the Fed raises rates, I think we're going to get a more, more selling. And if the Fed doesn't raise rates, I think we'll get a tradable pop out of the market. Longer term, and I have to say this simply because Mike's not with us today. Mike is exceptionally bearish, but he doesn't know when. Yeah, Barry, because will the outcome of the game tell us the direction of the market? And so, yeah, who knows? And so, anyway, as I said, Mike is over in this camp here. And I understand all the weight that's currently resting on the market, but up to this point, I haven't seen the chart details that are saying, hey, we're ready to go down. So basically, what we have to do is we have to keep playing the pullbacks to support for the bounce. And you do that until these pullback and bounces stop working. I think that's so. Yeah, I get to go see. They just did a renovation of, I think it's Memorial Stadium or whatever the stadium that the Cal plays in. I haven't been to a football game at Cal since. Oh gosh. Since 1966. How's that? So, okay, let's see what else we got here. Okay, here's where we're sitting this week. A little bit slow, not a lot of long side trade. Actually no long side trades for the month yet. We're halfway through the month. We're still continuing to bring in price premium on strategy 3. No spider trade from last week. We'll be looking at one to put out before the close of the day, but we're still making progress pushing the ball down the field. Here's where we're sitting. I need to close this gap. There's about a $4,500 gap between here and this trajectory on the equity curve. And that trajectory, the straight line equity, closes out the end of the year at $40,000, which is typically our target for the active trend trading system. Currently on profits taken, we're sitting at about 25.4. Strategy 1's down a little bit. Strategy 2 is up, and then strategy 3, which is selling weekly options, is up. We just, for those of you who are following strategy 3, we are attempting to open a position in Nugget, and it will be a wet and wild ride on Nugget, but it also, I did the math on it today, and buying the 2018 leaps, I'm looking to buy the 1840 strike price, and for the put and the call combo, trying to get into that at, I believe, 1690, and that works out where if we can bring in 50 cents a week per contract, or per straddle contract, that will equate to our per entity, so that would be 50 times 100, or 50 cents times 100, which would be $50 a week. If we can bring that in on each one of the straddles, that will, by January 2018, equal 100% return. That's the target. So here was the position that we opened back in September of last year that we've talked about previously, and this was on Tesla, with the premium collected since September of last year, plus the residual value that was in the long leaps that we sold, that we bought at the time. We were able to close this for a, not only paying for the $9,010 that was our capital invested, but we also gained on top of that another $9,018, giving us our 100% return, and we have since closed this half of the position. We still now have another strangle going with Tesla, but Tesla is we wanted to move into another entity for the time being. So future presentations will be at the monthly BAM meeting in San Jose on October 1st. My wife and I will be then heading back on October 4th back to Hawaii. I'm trying to work with Lee Tanner to get him into the BAM on November. And then, as I said, next Wednesday for the premium active trend trading members, we'll be basically showing you how to find rock solid support and resistance. And when I say rock solid, does it mean that those levels are never going to fail for planning trades around? No, I'm not saying that, because occasionally they do fail. But if we can get it down to where it's a higher probability for the levels of support and resistance holding, then those are the areas we want to be looking at. I want to remind everybody that the active trend trading system is based on the 5 pillars of active trend trading. We basically only trade top quality IBD growth stocks and our index ETFs and or the options that go with those. We basically cover when to enter, when to exit, what strategy we're going to use, and what our expectations are, and we also include in that our stops, our target, our profit targets. And so the active trend trading, we have placed 3 strategies on top of that, and all 3 strategies utilize the triggers from the active trend trading system. The first 70% of our capital is allocated towards stocks and index ETFs. Been a tough year for portfolio building. 10% of our capital is allocated to basic options, and then 20%, 20 to 25% we'll utilize for this wealth building, which is owning leaps and then selling weekly premium against those leaps. And then Barry wants to know, general question, how often do you hold these Friday webinars? Every Friday or every other? Typically every Friday, Barry, we hold these free webinars. And if you ever miss one, you can always catch it, like you can register for it. And I'll send out an email afterwards basically showing where it is where we post it. We post it on the website, and also you can catch it on my YouTube channel at Tech Talk. Market Tech Talk is my YouTube channel. And so that's all I've got for today, guys. I'll just say, see you next week. Have a great weekend. And now I'm ready. If you want to take a look at some stocks, we can take a look at some stocks and our index ETFs. Or I can... Okay, hold on. Got some good ones coming up. Okay. Okay, Dorothy wants us to take a look at air gas. I think it's air gas. Is that right, Dorothy? Or air gain. This is a new entity, Dorothy. It appears to be a new entity. I would want to run the, to see if it has any kind of stock checkup whatsoever, IBD, IPO. You've got earnings coming up here on 9/20. I wouldn't do a darn thing with it until, after earnings. It's got, it's shown up some, pretty healthy volume for a IPO. It's doing all these famous stair steps back up. And so that's what I would be doing on it, based on its IPO price down here at about $8. It's made it's 100% return already from the get-go, but it has not put in an IPO base as of yet. But thanks for bringing this one up. I am going to, somebody had one the other day that I've also added to my take a look at every once in a while watch list, and if it looks good, and after I do the market market checkup on it or stock checkup on it, sometimes they graduate to the private list. So yeah, so that's what I'd be looking at, simply because the 20th is what, next Wednesday? No, it's next Tuesday. And so that's when you're going to do earnings, after market. And so I wouldn't, I personally would not play it before earnings, just because I don't like to play it before earnings. So, and after earnings, as you asked the question about the pullback to the 8-day moving average, yeah, if it holds above the 8-day moving average or gets really flaky, this is really looking good on a CIA. It's actually, we are getting an initial coming off the 20 and going back above the 8. If we've got volume behind this, that would make a very good entry. You've got then your stop loss down here. You can either do one or two things: a stop loss on a close below the 20, or down below this 103 level. And from current prices, is how far is the 103 level? And again, this is just approximation. It's my eyeball measuring. you'd be looking at a drop of about 7%. So I wouldn't give it 7%. Who's asking for this one? Barry. But yeah, from, it is getting a nice little pop. I would then take a look at this also on the intraday, probably a 30-minute to an hour chart, because you may be able to get a better entry. Ideally, if I could get it at 107 or something, or even down at the 20 again, but it's getting a nice little bounce up, but it's selling off right at past, right at past resistance. And so that's what I'm seeing on that one. Okay, what is this? Acacia. Yeah, Acacia has been on our watch list, and we've been waiting for, a nice little pullback. But if we get a pushback up through the 8, then you can always just basically, if you get a close back below the 8, you get out. IPO, Rick asked a question, where is IPO base, etc. rules explained? It's explained on the IBD website, Barry. Rick, sorry. I have Barry and then Rick Barry. Not to be confused with a basketball star. But this Rick Barry is a star in his own right. So let's see what else we have here. War. No. Yeah, Tracy, war is one that is, I think, well worth keeping on your watch list. What are we doing here? Let's just take a quick moment and just draw in some numbers here. One, you've got this very strong level of support down here at 38.64. This has come back and testing it. Let's take this move from let's take approximately this move from here up to here. And as you can see, it's dropped down into the fib box of that move and is now rebounding. What about if we take, and I'm not meaning to throw a whole bunch of, come on, of confusion on here, but look what has taken place. It dropped all the way down here to the, I'm going to get rid of that one. The ones, as we've stated in the past, the 1618 retracement tends to be a very strong retracement support level, or resistance level if you're measuring the other way. And you did get a rebound off of that. I would like to, right now, it has dropped the 50 on strong, pretty strong volume, above average volume. So it may be doing one or two things. It's either basing to move back up, or it's basically coming back up here to the 8 to kiss it and then drop some more. You've got a series of now lower lows, one lower high, if you will, and so it's in the initial stages of what could be, what can be considered a downtrend. But at the same time, I would watch this for, for strong basing in this area, because as we said, you've got this strong level of support here. And let's just see if, if the momentum gets reversed and turned back around, because ultimately then in a bigger context, you've got this very nice uptrend here, over here, that has been broken a little, it has been broken, but if you pull down to there, it's basically right on line with this uptrend. And so let's see if we can hammer out something solid here, constructive, and then rebound from there. Let's see, war, Airgun, IPO. Okay, that's basically, that covers everything everybody wants to cover, but I've got time to take a look at, oh, Nugget. Somebody asked for Nugget. I think it was Tracy. Here's what we're doing with Nugget, or here's what I intend with Nugget. One is we played the seasonality on gold starting back here on I want to say somewhere in here about the end of June time frame, expecting the July, August rebound to be moving up, and we got a nice rebound. We were trading GLD on that. We had done a nice little option trade on it. Basically just buying a debit option spread and then letting it rebound. Gold tends to do two seasonal bounces. One of them is from the late June into the August into the September time frame, which we got that pegged at almost perfectly. But then it also does a second one down here in the going into October time frame. And so I'm looking at this, Tracy, and what we're seeing is basically, okay, we've got the 50-day correction, the 200-day moving average still moving up. We've got a nice level of support there at the 1739 level, and we've got positive divergence, although the TSI is going down a little bit, some positive divergence on a daily basis as it makes this new high. What do we have going on in the longer term on the weekly? Well, the weekly, we've still got things pointing down. And so, the next level of support, of course, is down here at $14. And so, in between, and so we could either go one or two places, $14 and then rebound going into the October, November, December time frame from that level, or if this level holds here, we may rebound up from there. And you got to remember that with things like Nugget, you can do one or two things. You can say, hey, I think it's going to be a double bottom right here. I'm going to buy it. If it drops to 1734, I'm going to sell calls on it because then I expect it to rebound somewhere between the 16 and 14 level. If you don't like that option, you close it out when it drops the 1717 level and wait for the next rebound. Because if we do get a rebound here, it's a nice little healthy return. Even if it gets back up to this prior high here, if I take it from current prices up to that level, you're talking about a 40% gain. And this is one of those entities I would not put a lot of fun, a lot of my capital into this. But if I'm watching it carefully, a small portion of it may be very beneficial. It definitely puts in excellent technical patterns, especially on a shorter, on the daily basis. But let's say if, say we, come into next week and we get an open down below this level, down below today's body, well, you can actually put a buy just above today's body if we open up below today's body. Because what that would be is a potential bullish engulfing and then proceed from there. So that's what I'm looking at with Nugget, Tracy. Okay, what else we got here? TSC, AMBA. Okay, I like AMBA. I think it's basically pushing back up to then basically roll over and come back and retest at the 50. Why do I say that? This little uptick here has been done on a at slightly below average volume, and so it is doing a consolidation here. I like it off the 8-day or the 20-day combo, and to see if it can push on up to get back up into that 72 level. On a weekly chart, It had a 2-week pullback, and it's got a bearish, bullish engulfing of last week's candlestick right now. However, it is at odds with its true strength indicator, which has in fact rolled over. But its momentum looks like it may be trying to turn around. We're past earnings, so that's good. And so we get this is basically an earnings reaction trade. Again, off the 50 and a nice rebound. So Eric asked me what I'm watching. I'm watching a couple. I'm watching one. See, hold on a second. Let me go over. Let me go over here. Okay, I am watching Juno for potential double bottom bounce here. It's looking, kind of. It has been on the IBD 50 list before, but you've got multiple levels of support right in this area. It has not kicked in strongly, and so it may have some more consolidating to do. I'm also watching CBM, similar type thing. It came down here and then did a reversal based on support that it's seen over here, has popped up to the 23.6, and it may be stalling out. We'll see if we get a pull back into the 820 combo before trying to bounce back up again. Again, issues over the last week or so, low volume on the remaining portion of this push up here. But like I said, it looked good to initiate, to begin with. What else? Tesla. Tesla also, it's come down and tested the 61.8 retracement level from, the move from June up until, no, I'm sorry, this is the move from February up to April, and it's ricocheting and trying to, do some constructive consolidation here. We'll see if it rebounds all the way up. Right now, the way I'm trading this one, Eric, is typically, well, basically almost all the news on Tesla has been extremely bad. I'm wondering if Elon Musk is going to, be able to use his silver tongue to convince everybody that it's a good deal for them to be buying Solar City. There's rumors they have a cash crunch. But we'll see what happens. I mean, basically, we can also trade, look at what's going on here, throw a fib on it from here, this level here, down to this level here, and oops, let's try to do that. And as you can see, it has just barely pushed its way up to 23.6 retracement. The 209 level would be at the 38, and then again you have the 20-day moving average coming down here. It's about the 206. And so, yeah, Eric, I'm not so much worried about all their bad news as much as, as long as Tesla continues to put in tradable patterns, and it's been doing that for almost the last 5 years, I will continue to trade it, and as long as it has nice, rich weekly premium, I will continue to sell weekly premium against it. Right now, what I'm anticipating is a move back up into the 205 to 206 level. If I hit 205, I will sell the 207.50 strike price call that expires next week, and then apply my rules for strategy 3. So does everybody know how to use the use your Thinkorswim expected move calculation that's provided with the options? Is that a yes, no, question? Okay, let's just do a real quick refresher, and I'll show you what I'm talking about here. If I can pull it up, here we go. There we go. Gosh darn. Having an issue with a little bit of issue with bandwidth this morning. Yeah, it's not pulling over. Let me see if I can get. No, it's not letting me pull it over. Sorry about that. What I'll do is we're going to be talking about that on Wednesday with the training session. So anyway, with that, guys, I'm going to call it a day. Thanks for joining us, and I hope that this has helped prepare you for what's going on next week and what we're expecting. So with all that, have a great weekend, and just enjoy the family, and God bless everybody.